Hello, everyone. Welcome to what is officially episode 3 of the Yala Bitcoin Liquidity series. So this is a series where we explore the most important and impactful projects across the Bitcoin DeFi ecosystem. And in line with that, it's a pleasure to be joined by Jacob Phillips, co-founder at Lombard. And for those of you who don't know, Lombard is a liquid staking protocol for Bitcoin. It allows users to amplify their portfolios with a liquid, yield-bearing, and cross-chain version of Bitcoin. We're also joined by KT, co-founder and COO at Yala, who will help shed some light on Yala's synergies with Lombard and what the future holds for the Bitcoin DeFi ecosystem as well. So, Jacob, it's a pleasure to have you here with us, and let's kick things off.
Awesome. Great to be here. Thanks for having me.
It's awesome. So, could you start by, I guess, introducing yourself and give us a bit of an overview into, I guess, both your journey across the crypto and the Bitcoin DeFi ecosystem, and as well as the journey of Lombard?
Sure thing. Yeah, so hello everyone. My name is Jacob Phillips, one of the co-founders of Lombard. Before Lombard, I was building a perps protocol called Perennial in the Arbitrum space for 2 years. And then before that, I spent 3 years as an investment partner at Polychain on the ventures team. And Lombard is a Bitcoin liquid staking protocol built upon Babylon. So users give the Lombard protocol Bitcoin, we stake it into Babylon, and then mint a liquid representation of that Bitcoin called LBTC on any of a number of chains. Right now, just ETH mainnet. Very, very soon, Base, Arbitrum, Solana, Parachain, you name it. This is kind of the big thing we're focused on right now. And Lombard is the largest Bitcoin LST. We're the largest contributor to Cap 2. We'll be the largest contributor to Cap 3. We have about 11,000 Bitcoin, just hit $1 billion in TVL a couple weeks ago. You can use LBTC in most of the blue chip DeFi protocols right now, soon to be all of them. So I think DeFi proliferation has been kind of a priority for us, and I think we've kind of been leading the way there. And then I think we have tried to, and I think at least succeeded so far in pushing the space forward from a security perspective, which I think we'll dive into a little bit here.
Yep, awesome. So I think to take it off script a little bit and go with a more personal question to start off with, what made you take the jump from working in Arbitrum, building out Ethereum L2s to jumping into the Bitcoin DeFi space?
Yeah, so I was still building in DeFi when I was working in the building a protocol in Arbitrum. I was working on a perpetuals protocol, very competitive space, building
Hmm.
for a subset of DeFi users. Very technical, very intellect. Like it was. Building DeFi perps, I think, is maybe, I don't know, one of the coolest areas of DeFi. And so now it's really cool because I get to work with all of those perps teams, but in like a little bit of a different capacity. As where before I was competing with all of them, trying to fight for the I don't know, the like 1,000 on-chain traders or something like
Yeah.
that. Now we get to collaborate with all of them, trying to build basis trading vaults, trying to get LBTC lists as collateral, do all kinds of stuff. So it was, I spent 2 years doing that. I think I got to work with and compete with some of the best protocols and founders in the space. And I think we'll get into this, but it was a little bit of just too good of an opportunity to pass up on. I think the timing was right. I think the building Lombard was a little bit more suited ultimately to the skill set of myself, and I think some of the people who sort of founded this. In that I went from venture that was extremely broad. I got to see everything happening in the space across all sectors of crypto, then to Perennial, which was like focusing on a subsector of a subsector. And now
Hmm.
Lombard is really about us onboarding net new capital to DeFi across the entire ecosystem, not just one subcategory of DeFi. But we get to work with all kinds of DeFi protocols, and hopefully one of the things that'll pop up this cycle will be lots and lots of payments for stable coins and Bitcoin, which we'll be able to get quite involved in. So you know, there are a lot of reasons that I ended up making the jump, but it was I think it's been a really great great few months. A lot of fun kind of reconnecting with parts of the DeFi ecosystem that I had not been as tuned into because I was working in the first place.
Okay, got it. And yeah, as you say, it's perhaps a lot about approaching the same markets, but from a viewpoint of creating synergies as opposed to I guess direct competition with all these interesting projects in the space.
Yep, exactly.
And I guess leading into that, what led to the creation of Lombard in the first place? What kind of trends or market gaps did you see? Was there a unique opportunity for a Bitcoin staking protocol, or was it more creating your own markets?
Yeah, so the way I frame it is that we'd had our eye on Bitcoin DeFi for quite some time. When I was back at Polychain in 2020, 2021, there was this big movement for Bitcoin DeFi. At one point, WBTC was exploding, just got added to Compound and was highly incentivized and was doing really well. And there was this project Badger DAO that Polychain invested in, which was like, to me, the first semi-successful attempt to bring Bitcoin into into existing DeFi protocols, or just into DeFi in general with any degree of success. But again, both of those, I think in DeFi summer last cycle kind of sputtered a little bit. WBTC hit a little bit of the wall. I mean, I think there's like 10 billion in WBTC, all on basically all on ETH mainnet. I think it was like a couple hundred million on Arbitrum and maybe a little bit on Polygon. Basically nothing anywhere else. A tiny bit on Solana, but I mean, $10 billion for many years of work in the grand scheme of what of the size of the Bitcoin is like
for an asset
basically
like
no
Bitcoin.
penetration. Yeah, exactly. And then kind of the same for Badger. Badger had some ups and downs and never really came to fruition in the way that people were hoping. And so, we knew there was this market opportunity. It was just a matter of timing. And earlier this year, we were just looking at the setup, and it was like the perfect storm. It was Babylon getting ready to launch with people excited to stake their Bitcoin. It was Bitcoin DeFi finally having momentum. You saw like, L2s launching with $1 billion in TVL and and like a lot of momentum around protocols popping up. Bitcoin DeFi was like the best place for people to earn yield in crypto or on their Bitcoin. There, you sort of didn't have these centralized institutions stepping up to be able to provide yield in the way that they maybe did last cycle, which maybe hindered some of the adoption. And then most importantly, there was this total culture shift in Bitcoin. Last cycle, WBTC and Badger DAO and all these other attempts, I mean, they were fighting against the wind here a little bit. Bitcoin maxis wanted nothing to do with DeFi. Expressivity at the Bitcoin base layer wasn't even in the conversation. Fast forward now, you have some of the biggest Bitcoin maxis in the space kind of foregoing some of their maximalism to understand that like DeFi is like a great thing for Bitcoin ultimately, and are now running venture funds that almost exclusively invest in Bitcoin DeFi. And now you have 4 or 5 different movements to include more expressivity at the base layer. And now it seems like it's only a matter of time before you get something like Opcat or a BitVM implementation that allows for us to have true non-custodial finance on top of Bitcoin. So, I mean, everything was sort of set up, I think, for what was to be a very big year and couple of years for Bitcoin DeFi.
Yeah, the perfect storm, as you say. And I guess a side note here, how do you see the battle against I guess quote unquote Bitcoin maximalism and the I guess the opinions that the typical BTC holder has towards both the DeFi space and I guess putting their BTC to use across DeFi protocols? Do you feel that is the narrative shifting here, or are the tide shifting, or?
The narrative is for sure shifting. I mean, it's kind of it's insane how much. Certainly, there's still a big tribe of BTC maximalism, and I think people still very much view their Bitcoin differently than they do other assets in crypto. Even something like ETH, like ETH, you'll do whatever with. Bitcoin is very much this. There's like a whole lot more gravity behind Bitcoin as this like inflation resistant reserve asset that's just that's going to save you in case like the dollar blows up or something like that. It's a very different type of asset still, but 100%. The tide is totally turning. I mean, just think about how much progress we've made in this boat in like a couple of years. One cycle we went from no way Bitcoin DeFi could ever be a thing now to 100% it's going to be a thing. Babylon opens 16 blocks worth of staking opportunity, and you get $2 billion from some of the biggest institutions in the world. I mean, everybody's excited about getting involved here. I think maybe one thing that Bitcoin DeFi has done pretty well here, and I've only, I mean, when I was at Polychain, we were really only investing in call it very complex DeFi protocols, trying to do the coolest stuff, if you will. And Bitcoin DeFi is like back kind of starting simple, which is actually, I think, the right way to go. It's hard to pitch people on Bitcoin maxis on prediction markets and permissionless perps and leveraged looping of your Pendle PT tokens until you first pitch them
that comes
on
later.
just getting their Bitcoin out of their cold wallet and into something on chain. So starting with Babylon as like the first piece of DeFi they get involved in, just do something as simple as stake it from your self-custodial wallet, and then being able to start having these conversations about what a broader on-chain financial ecosystem looks like. That I think has been a really fruitful conversation with just most BTC holders. At least I think everybody's at least curious about these mechanisms now.
Yeah, definitely. And I guess you mentioned the progress made over the last few years, but even just the last, I guess, 6 to 9 months, it's been absolutely insane to watch the evolution of the Bitcoin DeFi space.
Definitely,
it's exciting to be a part of.
Yeah.
So you just mentioned a number of other BTC-focused DeFi protocols or projects on teams building out novel features for Bitcoin. So let's take it a step back to Lombard. So what differentiates Lombard and LBTC from these other staking or liquid staking platforms in the Bitcoin space?
Yes, this is a great question. So I would start with where we're at right now, which is Lombard has, Lombard is the largest Bitcoin LST. We are by far the most liquid. We have about $1 billion in TVL. Over half of that is distributed into DeFi. This rate is significantly higher than anything else in the space. We have sort of the best DeFi integrations, the most DeFi integrations. We're just about to go cross-chain, which I think will push that even further. So out the gate, I think the most important thing is sort of for us, our North Star is LBTC becoming the ST ETH of Bitcoin, this kind of one universal Bitcoin primitive that, protocols, chains, and users kind of collectively adopt as and institutions adopt as their sort of chosen BTC asset. We're already on the way to making this happen. And some of the reasons I think this is the case is that Lombard as an asset has resonated a lot more with the likes of those who are using DeFi than I think other and institutions than other assets. And there's a couple of reasons for this. One, I think Lombard is the only Bitcoin LST that has attempted to create some form of decentralization out the gate. Almost every other solution is leveraging centralized custodians to the max. Lombard from day one was built with this decentralized consortium on top, and soon our next upgrade is going to be transitioning to a Cosmos SDK chain, which will allow us to expand that consortium quite significantly to create operational robustness. At the end of the day, I think what they don't realize is that it sounds all great to hear that, oh, my funds are stored in Cephuu or Kobo or something like that, but what they don't realize is on the back end, that's like 2 of 3 multi-sig within the team and some person, one person on that team clicking some buttons, right? This is not, maybe you can store 10, 20, $50 million like this, but you're not going to be able to store $10 billion. That was our thought from the start, was like, how do we... We've
seen that backfire in the past as well.
Exactly, right? I mean, Bitcoin DeFi space love to complain about WBTC, but then when they look at your own setup, it's like far worse than that, right? So this is the first thing. Like, we started out with this mission, and then I think decentralization was always core to this, but we can even get a little bit more practical about this and just think about security. Lombard is built to be this sort of security first, blue chip, trusted asset. And to do so, I think there are certain security properties you have to build into this. If you think about Lido building STETH, there are certain things Lido would do and certain things they wouldn't do. Lido wouldn't start accepting 12 different forms of ETH, right? Lido needs to set the security standard in the space for like what is acceptable. There's a little bit of nuance there because Lido can't stake all forms of ETH, but it's like, there's certain things that they would take and certain things they wouldn't. Lombard is sort of setting the standard for security in the Bitcoin space. Right now, Lombard exclusively takes in native Bitcoin. We exclusively leverage, we have like one unified security layer. This is the Lombard consortium plus key management software using Cubist. And we're sort of very, very focused on this. So all of our TPL has kind of come in this way. And I think this is important because, when you're trying to create a primitive that gets institutions and retail alike comfortable around, you sort of don't want to be like taking in 15 different sources of risk. I think this is one thing that it's great from a product perspective, but it doesn't build a long-term foundation. Because at the end of the day, the real way to think about it is when you package up 15 risks into one, it only takes one of those, one of those to turn sour to take this thing down. So in this case, I think a lot of the other assets we're sort of competing against are kind of throwing all kinds of risks into one basket, to try and, I guess, to distribute faster. But I think this is going to backfire almost certainly. And if you look at some of those assets, these people are including in the pool, you don't always want to be holders of that.
Yeah.
It's not like this is WBTC or CBBTC. This is like, often B or C tier assets. And then here's another point on security. This was actually pretty surprising to me, but we just sort of figured this out. Lombard right now is the only Bitcoin LST with a live proof of reserves, and we've had this from day one. And this is pretty crazy to me.
It's the only one.
Only one, yeah, exactly. Everyone's building one with Chainlink after Lombard announced, but only one with a live. These protocols have been around for 6 or 8 months at this point, and this is pretty wild to me. When CBBTC came out and launched without a proof of reserves, you saw the whole ETH space was in uproar. People were like, this is ridiculous. Who would even think of launching this kind of protocol? And you might have seen the Bitcoin space was pretty quiet while that was happening. So, these are the kind of things where it's like, Lombard didn't even think about launching without a proof of reserves. Other protocols don't think the same way. So, those kind of things I think will. It's one of those things where it's like, it's a little issue right now that can be corrected pretty easily, but I think it's a difference in mindset that you'll see over time. Those are probably the main two things. Maybe the one other thing is, we've been taking a little bit of call it a combo of retail and institutional approach from an early stage, which is we've been starting conversation. From the beginning of this project, we were starting conversations with the likes of the Franklin Templetons, a lot of people in the Polychain ecosystem, some of the biggest Bitcoin holders in the space. We brought on a BD lead from an early stage who has a lot of institutional experience with the goal of ultimately taking this to a really big level. We've been pitching these guys on what it would be like to get involved in DeFi, which admittedly is not a
it's a tough first conversation.
Yeah, exactly. It's not a month or 2 month pitch. This is like, these are conversations that you have to start and don't have payoff for a year or something like that. But all of this is to say Lombard's not playing the short game. We're not in this to get a Binance listing or something else. We're playing this because we're going to be around building for 4 or 5 years to come, at a minimum, and hopefully at that point, LBTC becomes this hard and decentralized primitive. But until then, I think we're sort of setting the foundation for a lot of really big things that I don't have full answers to at the moment, but I think there'll be some exciting stuff.
Awesome. It's exciting to hear. So I guess 2 follow-up questions based on this. So the first one, you've mentioned the Lombard Security Consortium, if that's the correct. Yeah. Can you shed some light on what this is and how it works and how it benefits, I guess, both Lombard as a protocol, but also a holder of LBTC?
Definitely. So the way to think about the consortium is anything built on Bitcoin right now, because Bitcoin doesn't have smart contracts or expressivity at the base layer. If you want to build anything on Bitcoin, no matter what it is, you necessarily have to leverage some other security primitive. When you're building on Ethereum or on Solana, you have this kind of shared security layer that is smart contracts. So everybody builds on the same security primitive. Bitcoin doesn't have this. So every Bitcoin L2, basically every Bitcoin LST, unless they're building on someone else's infrastructure, all of Bitcoin DeFi is kind of creating their own security primitives, for better or for worse. Most people are punting on the problem. That's why they're using centralized custodians and little multi-sigs within the team. Lombard is kind of building both. So the way I think about it is Lombard is two things. It is a liquidity primitive, which is LBTC. This is a liquid staking token that floats throughout DeFi. And the second is a security primitive. This is the security consortium. So in order to secure Bitcoin right now, you sort of have to create this like layer that allows you to do expressive things on top of Bitcoin. So the Lombard consortium is a group of 5 institutions close to the Lombard ecosystem right now. Will soon be 21. This is going to be some of the biggest mining pools in the space, maybe some of the biggest exchanges. It's going to be some of the biggest chains and ecosystems who are adopting LBTC will be running nodes in the security consortium. Some of the biggest validators and some of the biggest DeFi protocols all getting involved. And you can think of this, I mean, this is sort of the WBTC approach on steroids in a lot of ways. WBTC, I think, had a consortium of like of 5 parties or something like that who were signing initially, and we're going to decentralize this. We're going to distribute this geographically. We're going to ultimately pass this on to decentralized governance. But the whole goal here is like we're going to pick 21 of the most trusted parties in the space, and in our view, as I was kind of saying before, this is the only way that you can secure $10+ billion of crypto safely right now, is by creating this kind of consortium, unifying the ecosystem around one primitive from a security perspective. This is sort of what it is. The social unification piece, I think, is kind of interesting because this is one of the hardest pieces to recreate. When you think about security, ultimately it comes down to, the nature of the parties who are holding the keys in the background. It's much harder to to corrupt a longstanding institution who's been in the space for 10+ years than it is to corrupt a team member of some Bitcoin DeFi protocol that's that's new to the space. So I mean, this are the kind of things that we're trying to correct for.
Okay, very interesting. And I guess as a follow-up to the previous point, again, we're discussing the the future adoption of Lombard and LBTC, and kind of the path you're going down. So you mentioned the split between retail and institutional focus in growing the adoption here. How are you currently approaching the split? Is there is there a roadmap for first getting all the institutions on board before driving retail interest, or vice versa? Or
it's a good question. I don't think so. I think it's a mix of both, right? Like the goal is to onboard as much Bitcoin to Babylon through Lombard as we can, but there are different methods of doing it. I think, and also the term institution is nuanced. I think we throw it around a little bit too loosely in crypto.
Yeah, it's very vaguely thrown around.
Exactly. And I was using it in a very vague context here. Institution can mean everything from a family office or crypto native VC to the Franklin Templetons of the world. And I think it's kind of like the definition of institution shifts over time. Right now, the institutions we're going after are like the more crypto native shops who are interested in DeFi. Maybe we're deploying to EigenLayer, are at least open to the idea of putting this to work. Because one thing I think you can always go to big institutions and pay them some yield to get their Bitcoin doing something, but what we found is that in a lot of cases, those guys just aren't ready to do anything productive with that LBTC. So sure, there's a way to get them, to start. Maybe you can get them to stake that Bitcoin. You're not going to get them to, start deploying the liquidity or help supporting the ecosystem in a really big way. And so, we're much more focused on, call it, institutions who are ready to be productive in the Lombard ecosystem than we are others. So I think these are more the lower hanging fruit, more crypto native folks. But it's all this game of like, you start somewhere, build up a bit of an ecosystem, and then it becomes a whole hell of a lot easier. I mean, now that we're at $1 billion in TVL, I think this is going to, raise some eyebrows from people at bigger institutions, that we haven't been able to move the needle on just yet. So I think it's only a matter of time. And in the meantime, I'd say like maybe, Lombard's BD team is probably sourced somewhere around a third, maybe a third or 40% of capital in the pool. Like we kind of know who these people are roughly. The retail pickup has been incredible. I mean, Lombard's the simplest product to understand. It was, we kind of launched with great DeFi partners from day one. There's going to be a whole hell of a lot more you'll be able to do with your LBTC once we go cross chain. So I think this is the type of product that I think sort of grows itself once the foundations are seeded correctly, which we put a really heavy emphasis on. We have like really deep liquidity. I think like $70 million in liquidity pools right now on Uniswap and Curve. I think we have like 150 million in a DeFi vault that allocates between some of our biggest DEXs and borrow lend protocols. So the foundation is there. Now it's just a matter of getting people comfortable with the security risks of Lombard, Babylon, and DeFi.
Yeah. Okay, got it. And yeah, I guess that's, as you mentioned, that's something that takes time, regardless of how great the foundation is.
Yeah.
I guess for Lombard, what do you see as what is the foundation here for growing Lombard? Is it liquidity? Is it a number of direct integrations?
Yeah, I
great
think
education combination.
It's a combination of all of those for sure. I was going to say I think the two are liquidity and security. Liquidity we've sort of discussed. This is, you set the foundation with DEX liquidity and borrow lend protocol liquidity, and this allows for just about anything to be built on top. So we think of this. I sort of think of LBTC as this public good for bringing Bitcoin into DeFi. Now DeFi protocols have access to $2 trillion in liquidity they wouldn't have otherwise had access to. So I mean, Lombard is this massive resource to every DeFi protocol and every chain that's now launching. Maybe all of those guys' most pressing need is that there's net new liquidity brought in. It's sort of the lifeblood of all of these DeFi protocols. Lombard enhances this significantly. So that I think is a big piece. But the security piece is like, this is what being a primitive is all about. This is the reason that everybody uses Uniswap and STETH over other options. I think is that there are like these primitives, if built right, have the potential to become Lindy, and this is the ultimate goal. Nobody thinks. I mean, at this point, it's like Uniswap V3 contracts have had I don't know, $10 billion bounty on them for a couple of years. If anybody can find a bug, fully open source, fully decentralized. This is like a safer place to put your money, I think, than most banks. Like, this is the kind of thing we're building up to. There's a time component to this, which is basically like, you need to have demonstrated a certain amount of security over some certain period of time, I think, for this to become considered robust and secure. And there's a decentralization component, both of which I think Lombard is working up to. But this is like the long game that I think has a really big impact. It's one of those things that you can't fabricate. You can sort of only establish yourself as this hardened primitive after, years of successful operating, but it's not even really operating, because ultimately this transitions to an autonomous on-chain primitive. That's what we're building towards.
Yeah, and that was going to be my question. How do you demonstrate, I guess, an ethos aligned or a security aligned ethos of development approach to development? Like if it's not, I guess it has to be time driven. You need to demonstrate robust security practices over a significant period of time.
Yeah, exactly. It's one of those things where it's, it when you see it. Talking about security doesn't do anything. I think this is the big difference. Is like talk is cheap with security, especially coming like a guy from like me who's not writing the code. At the end of the day, it's like the only thing that matters is what sort of happens in practice, right? I've sort of explained what good security doesn't look like. I think I've explained like what we want to see ultimately. You want to see something like a Uniswap where fully permissionless autonomous DeFi protocol, running itself at this point, fully open source code, massive bounty to hack it. Nobody has. I mean, that's one of those things where it's like when institutions are coming in, the number one thing they're thinking about is security. I mean, this is true for everyone. I think a lot of Bitcoin, or rather a lot of just DeFi in general, is sort of trying to attract users at a net negative expected value after you account for smart contract risk. So the number one goal for most of these protocols really should be not trying to bulk up the incentives. Well, maybe to compensate for smart contract risk, but more so to figure out how to reduce this as quickly as possible, leveraging other existing infrastructure that's been used, building your own robust infrastructure. I mean, Lombard's we're sort of exploring all solutions to make sure that we get to the point where users are comfortable with what we've built as soon as possible. And you know what? I actually think that this was a consideration for a lot of Bitcoin DeFi out the gate. And this is why people will tell you, oh, we leveraged, we just decided to build on Koa or Cefu or something like that because it was, this was the safest option or something like that. And to me, it works halfway. Like at the end of the day, all new solutions to the space have to bootstrap some sort of new security paradigm that they get people comfortable around. Lombard building the way we did with a decentralized consortium and building upon this sort of decentralized key management solution, Cubist, was not the easiest route we could have gone, but it's paying off. This is where things become tough. I think we would have onboarded Bitcoin a whole hell of a lot quicker had we just leveraged centralized custodians from the start. But having gone through a little bit of that education phase where we struggled with some of these big capital providers, but then we're able to get them comfortable around the sort of security paradigm that we were building in, now has massive network effects that will that we're hoping will be realized coming into Cap 3 and beyond.
Yeah, and that again goes back to the foundation that you mentioned Lombard are building that many other projects aren't. I think it's a lot easier to, I guess, outsource responsibility for security.
Yeah,
as opposed to
exactly.
Actually, internalizing and taking full responsibility for the protocol and for the assets that your onboarded users are trusting you with.
Yeah, framing it as outsourcing security is sort of an interesting way of putting it, because as a DeFi primitive, building on top of Bitcoin, I think there's probably some value in, it depends what the focus of the tool is. In this case, like, owning the security layer, I think is actually probably a quite valuable thing. I don't know that everything in Bitcoin DeFi needs to own their own security, because at the end of the day, it's like, even for a liquid staking token, the product is liquidity, not security necessarily. I mean, it's a little bit of both, because there's no good security solution. So somebody's got to build it, right? But I think ultimately, hopefully the goal is that, one day Lombard builds a really robust security solution. And if, expressivity at the base layer doesn't come sooner rather than later, maybe Lombard can even open this up to other participants so that they wouldn't have to worry about this type of thing.
Yeah, it is probably also a lot more beneficial to the ecosystem as a whole for many projects to not have to, I guess, implement their own security measures. I think
100%.
a lot of projects aren't probably prepared for it, and using universal solutions is not a bad idea.
Nor should they be. Like, building a chain and building a Bitcoin liquid staking token are two totally different things. And I think we're sort of forced down this route of building this way because the infrastructure doesn't exist that's suitable for us to build this way. But I totally agree. We don't need 100 different security primitives in the Bitcoin ecosystem, which is what we have right now. Every new project that pops up has to create their own. This is like house of cards that will for sure.
Yeah, we also kind of seeing this kind of pressure from token holders. This might be an exaggeration, but every project with a token is kind of expected to, at one point, build out their own chain and their own ecosystem, which of course carries. And you're seeing that with Uniswap now as well, I guess. Not totally similar, but there's a lot of expectation from token holders that every project has to do everything.
Yeah, exactly.
It's dangerous. I guess moving on from the security chat onto a more difficult question here, perhaps. What does the next year or 5 years hold for Lombard? Where's Lombard in a year? We'll start with a year.
I think in a year, hopefully LBTC has become this sort of widely adopted Bitcoin primitive that is beginning to become synonymous with Bitcoin and DeFi. Right now, the way we usually talk about it is there are centralized wrappers, there are liquid staking tokens, there are all kinds of wrappers on top of that. The ultimate goal for liquid staking all along, thinking back to like 2016, 17, 18, when people were first coming up with the idea in the Cosmos ecosystem, and translated to Ethereum proof of stake, was that ultimately liquid staking replaces the need for sort of using the naked asset in in DeFi. So it's like the dream all along was that people would start using STETH as a true replacement for ETH within DeFi, which enables full security at the base staking layer plus endless opportunity to take that asset and build a DeFi ecosystem. This is hopefully where we're headed. I think like right now Lombard is arguably the best way, best sort of best way, all things considered, to be able to bring your Bitcoin from Bitcoin L1 into a new ecosystem. Native yield through Babylon. A lot of exciting ways to earn yield there. Stack that on top of integrations with all the DeFi protocol. And the big way I sort of frame Lombard is that Lombard was just built with a catalyst in it that a WBTC and some of these other protocols weren't. From day one, we focused on this because this is the name of the game. It's like, how can we get Bitcoin to scale in DeFi faster than anything else? And this was the way to do it. So
What
I
do you
think
mean
that's Lombard
by this catalyst? Is that the yield bearing aspect, or?
Yeah, the yield bearing asset, but I think it's just building within an ecosystem like Babylon that has these sort of an exogenous catalyst to get people excited about it. It's not, we've had Bitcoin wrappers for quite some time. I don't think that has sort of moved the needle. It's, Bitcoin staking as sort of the first jump into DeFi, I think has brought up a lot of people. Maybe another way to frame it is people have been talking about, liquid staking tokens, receipt tokens, and yield bearing collateral for years. I mean, this was from the dawn of DeFi, again, back to 16, 17, 18 or whatever. But up until EigenLayer introduced sort of additional incentives to use an LST or an LRT or some yield bearing token, up until that happened, you saw very little adoption. And then once EigenLayer was sort of introduced, there was an explosion. Every DeFi protocol was looking to build on yield bearing collateral. It became like the best growth mechanism for protocols to acquire new capital. And I think we saw that very clearly, and I think the same is kind of happening in the in the Bitcoin space. I think in many of these protocols, the liquid staking tokens are seeing as much, if not, well, usually the liquid staking tokens, the wrappers go hand in hand. So like we work really closely with WBTC and CBBTC in most of these protocols. So I shouldn't say the choice is one or the other, but I think at the least, liquid staking tokens have been a powerful catalyst for getting people's Bitcoin out of the depths of a cold storage wallet into some form of on-chain finance. Yeah. So
I guess that's the first and the biggest challenge.
Yeah, exactly. So and maybe I'll just continue the question real quick. That's the 1 year vision. It's like we're fully focused on a single thing. You're not going to see Lombard building out 8 different products or trying to compete with the ecosystem. We're building an asset. We're fully focused on, enhancing the security of this, distributing it cross chain, working with all the DeFi protocols to kind of let this be an ecosystem first primitive. On a 5-year basis, I think Lombard's grand mission is all about onboarding new capital into on-chain finance. I think how exactly this will play out and what this will look like will be a little bit of a function of how the ecosystem adopts a primitive like LBTC. But, our user base fundamentally is the biggest crypto holders in the space. So, we're going to be working with them to figure out, what different things we need to do to get the Bitcoin. I guess not, maybe even not just the Bitcoin, but get, any assets out of cold storage into more productive use cases. The original vision for Lombard was, Bitcoin is this like boring store of value asset that doesn't do anything. Now we're turning it into a productive financial tool. I think we can do this potentially with with a lot of different assets. It's sort of, my hope is that once we have this conversation with capital providers about, about the Bitcoin stack, it then becomes really easy to sort of have the similar conversation with those users about a lot of other financial activity they're doing. How can we bring more of this on chain? So I think this is sort of where we're headed, and we're having a lot of conversation. I mean, the cool part about having these conversations with institutions is, they get to learn from us over a year, but we get to learn from them over a year too. They talk to us about how they think, and I think this is helping us shape what may look like, a future evolution of Lombard.
Very interesting. I guess going back to institutions quickly, more out of curiosity, the rise in the Bitcoin ETF landscape. How do you see this, both from a personal perspective and as well as I guess a driver of integrations or synergies for Lombard, if there is potential here?
Yeah, hopefully there's synergies. I mean, believe me when I say I think we've talked to most, if not all, of the Bitcoin ETF issuers, trying to convince them to stake their Bitcoin. It's unlikely to happen in the short term. So again, that's like a 5-year, maybe even longer play. But people are curious about it. I think the fact that we have a Bitcoin ETF is pretty crazy. I mean, if you think back to last cycle or the cycle before, it was hard to even imagine this kind of thing is happening. And now we have, it's like, I almost take for granted the fact that we have a Bitcoin ETF, and that now
it's been very quickly forgotten, or not forgotten,
exactly
normalized.
Like, the amount of progress we've made just in a short amount of time is insane, and all of that progress is reflexive. Like I when I first joined the space in like late 2018, I thought it was easy to join then because I was like, oh, there's already so much momentum behind Bitcoin and crypto. Like there's no way this would ever not succeed at this point, right? And now, so many years later, I still hear people say this. I'm like the U.S. is about to add Bitcoin to the strategic reserve potentially. This is insane. Like, what more of a stamp of approval do you need for an idea, not the asset? Like, I think of Bitcoin as this like idea that is hardened at this point. Even if the tech didn't work, or even if something sputtered, people would just spin up a new Bitcoin. The idea that you could have this government-free, inflation-resistant currency is beyond the point of no return. Like,
especially
it's
one
too late.
Integrated or adopted or accepted by governments as well.
Yeah,
governments
exactly,
like the US.
Exactly. Yeah. I feel like the US, I feel like in a lot of ways, US was sort of the final boss. If there's anyone who was going to hold out on Bitcoin for as long as they possibly could, it was going to be the US government. And to see them starting to get excited about Bitcoin, I think is pure validation for everything everyone in this space has been building for whatever it is at this point. I don't know.
I think it turns out the European Union is the final boss.
Yeah, exactly.
Let's see what happens there.
Yeah.
All right. I realize I've kept you quite a bit over our scheduled time, so I will let you go shortly. Do you have anything to share regarding recent Lombard developments? So I saw the campaign you're running with EtherFi now. Is there anything else you can point our listeners towards?
Exactly. Yeah. So check out the EtherFi campaign. We work with EtherFi to create a restaked BTC called EBTC, exclusively backed by Lombard. They're throwing a ton of incentives at this to sort of onboard new capital to it. Right now, Lombard is giving a big boost in Lux. Great way to get your Bitcoin involved in the ecosystem. So check that out. Lombard will be going cross-chain very, very soon, just finishing up audits at the moment. So get ready to use LBTC within a number of different ecosystems, which I think will be pretty exciting. And we didn't talk about this all too much, but certainly should mention that hopefully users will look forward to using their LBTC within Yala. I think I see more and more people tweeting about the idea of, one of perhaps the most exciting things about Bitcoin DeFi and being able to use your Bitcoin in DeFi is the opportunity to create sort of a stable coin backed by these yield bearing assets. And it's actually interesting. There was like a little bit of back and forth on Twitter the other day from a couple of big VCs in the space of like, oh, why doesn't MakerDAO just do this kind of thing? Or like, hey, can we get a Bitcoin backed stablecoin? I think it's a huge opportunity. I think there's, I sort of joked that, hey, maybe we don't need new DeFi protocols. Maybe we can just use the existing ones. But I think what Yala is really focused on is like, we're talking about $2 trillion worth of assets. I think there's plenty of room to carve out like this sort of Bitcoin DeFi like, to me, the only time the Bitcoin DeFi as a focus really makes sense is when you're going all in on an ecosystem from a distribution perspective. And I think you guys have done that extremely well so far. And I'll be excited to be working side by side with you guys to onboard LBTC and other Bitcoin assets into some form of productivity. Yala being a core piece of that.
Yeah, I appreciate that. Yeah, very excited for what the near-term future holds for Yala and Lombard together. So,
exactly.
Lots coming up. Jacob, I will let you run. It was an honor to talk to you. You're very interesting to talk to, and your vision for Lombard and Bitcoin is fascinating. So.
Awesome. Well, thank you very much. Appreciate you having me, and looking forward to working with you guys pretty closely.
Definitely. Speak to you soon. Take care.
Cool. Thanks. Bye.
Bye-bye.